Good afternoon, everyone present here. I'm here to share my thoughts on financial consumer protection in India. The first question that comes up in everyone's mind is who is a financial consumer and what is the concept of protection of financial consumers. Quite a lot of us would be aware of the Consumer Protection Act in India, and then, of course, the second question that strikes is this talk about the Consumer Protection Act? Yes and no. I'll give you the answer towards the end. This talk is definitely about the Consumer Protection Act, but we are going to focus on a very specific area, which is the financial consumer. Now, for some of us, this could be a very esoteric subject, and they feel that it should be directed towards people who are dealing with a lot of money. However, let me assure you, this is not that esoteric, and it deals with people like you and me who are dealing with financial products in day-to-day life. Well, to begin with, we have to first find out who is a financial consumer. Financial consumer is not something entirely different from consumer that we read about in the Consumer Protection Act. Financial consumer is a subset of the word consumer. However, we distinguish financial consumers from other consumer. The word consumer invokes an image where people purchase goods or hire services in exchange for money. In case of financial consumers, what these consumers do is that they do not purchase goods or hire services, rather they pick up a financial product which distributes risk. The primary purpose of having a financial product is distribution of risk, or taking away of risk, or assigning risk to different individuals. We will later understand it by examples, but for the time being we have to understand it that financial products essentially transfer risk. Now, we can also state that financial products in a sense are when people purchase money with money, money that is receivable or money that comes to them at a later point of time, or when a certain eventuality or when a certain situation materializes, like as in the case of an insurance product. However, it's just a way of expression that you purchase money with money, but in essentiality, or in what we call is that what we call the classical explanation is that financial products deal with the risk of financial loss which is present in every activity, and they attempt to provide a financial cushion and transfer risk. However, for the limited purpose of our talk and to enable a better understanding without getting too deep into the financial world, we would understand financial products as purchasing money with money, and this purchase has got linkage with time or with risk or with both. Now, money is a medium of exchange. That is, we can purchase goods or and hire services in exchange for our money. However, in a majority of cases, we do not need the entire money immediately that we have in our pockets. We may need a small amount of money daily for our routine needs, like purchasing vegetables, or we may need a large amount of money at certain times for our special needs. We spend small amounts of money on our daily routine needs and save the rest for our needs that may arise or are planned in future. Now, all of us cannot have money for our daily needs every day. Like, say, people who have retired, they do not have a regular source of income. Or for that matter, we cannot have large amounts of money for our special needs when such a situation arises. Now, this is where the financial products come in. They distribute risk, but they distribute risk by taking in money when you are capable of earning money and giving it back to you when you are no longer able to earn money, like in the case of pension products. So your risk is that you are taking, that you would not be able to earn money when you are retired. Some people may be able to earn money, but quite a lot of people would not be able to earn money. So that risk has been distributed, that risk has been brought forward by the virtue of that you are required to invest a certain amount of money today in your pension products, and those pension products will help you to lead a comfortable life when you are retiring. Therefore, the aim of these financial products is to provide us money when we need it. I would not be dealing with complicated instruments here, such as derivatives, since that wouldn't serve the purpose of the seminar. I am concentrating on the products that we use in our day-to-day life. I would not be dealing with pension products also in this presentation, because right now I think I'll better concentrate on the three products that most of us are using in our day-to-day life, which is banking products, insurance products, and investment products in form of the mutual funds. My talk would be structured in this fashion. First, I will talk about common day-to-day examples of financial products. Thereafter, I will talk about the requirement of consumer protection and the protection mechanisms in banking, insurance, and mutual funds. And lastly, I would be talking about the protection under the Consumer Protection Act. Now, let's take an example to understand the concept of a financial product. There is a person, Kirti, who is a common regular person like me and you, happily married with the school going kids, and resides in a happy family with his parents, who naturally are old. Kirti has a job, he is good at his job, and the job fetches him a monthly salary of, let's say, 30,000 rupees. Now let's find out what are the regular expenses that Kirti has. Household expenses: rent, grocery, milk, travel, etc. Kids expenditure, school fees, etc. Miscellaneous expenditure, outing, games, etc. Let's say all this adds to around 20,000 rupees a month. Kirti is left with around 10,000 rupees in hand every month. Next, everyone gets some planned and some unplanned future expenses. Planned future expenses can be like kids' higher education, marriage, tours, etc. While unplanned expenses can be, let's say, medical emergencies, death of the breadwinner, natural hazards like earthquakes, loss of employment, like as in the present case, unfortunately, a lot of people have lost their employment due to this pandemic, COVID-19. Now coming back to our example, since Kirti is left with rupees 10,000 in hand every month, he has to utilize this money for his planned and unplanned future expenditure. Let's suppose Kirti's sister is getting married, and then for Kirti has to give her an expensive sari or a necklace worth rupees 30,000. Kirti cannot manage this from his monthly salary, but he can definitely manage it if he has a fixed deposit with a bank. Kirti breaks his fixed deposit and uses the money to purchase the gift for his sister. A bank deposit in this case is a financial product. Kirti has, in a sense, purchased the bank deposit by paying an upfront amount or by paying a small amount every month. When we pay an upfront amount, we go in for a fixed deposit or a time deposit. When we pay a regular amount every month, then we go in for a recurring deposit. Now, as you can see in this example, a fixed deposit is not much different from purchasing a flat by paying the entire money upfront or through EMIs. The only difference is that in case of flat, you get to live in it, while in the case of fixed deposit, you get a large amount of money after a certain time, which you can use for your needs. So what are we essentially doing is purchasing money which is payable to us on certain occasions by using the money that we have in our hands. Let's take another example. Suppose an unfortunate incident occurs and Kirti or someone in his family is hospitalized. The bills for such hospitalization are huge, and with his meager 30,000 rupees salary, it's impossible to afford such an expenditure. In this case, Kirti has two options. One, take a loan, and second, take out an insurance policy. Now, as you could understand from my previous example, in both of these cases, that is the loan and the insurance policy, both of them are financial products. In the case of loan, you receive a large amount upfront for your needs, which you have to pay later with interest. If you look at it, again, it's not much different from the EMI of your flat. You receive the flat and you start using it, that is living in it. Just as you would do with the loan amount, use it for medical expenditure and pay it later in the form of EMIs or interest payments. So essentially what you are doing is that you are picking up a loan using it for your medical emergency, and then paying it later in at the time when you have got from your regular income. This is essentially what financial products do. You have got a risk, the risk of a medical emergency, and financial product has taken care of the risk. This is a very simple example of a financial product, but nonetheless it's a financial product. We have got very complicated financial products in which minute amounts or very fine risks are distributed, but however at this stage we are not getting into that. Now coming back again to our example, in the case of an insurance product, you pay a premium to receive a guarantee that the insurance company will pay money to you in case a risk stated in the policy manifests itself. Thus, in the case of a fixed deposit and loan, money and time are interlinked. You purchase a large amount of money in the present, as in the case of loan, or a large amount of money in future by using the money you have got in your hand. The money that you are purchasing in future is in the form of fixed deposit, because when you are putting it in a fixed deposit or in a recurring deposit, the money goes on increasing through interest accumulation. In the case of insurance, you are not guaranteed money after a certain time, but only at a particular point of time in the event of a risk materializing. Thus, in the case of insurance policies, money and risk are interlinked, and your risk is borne by the insurer. Let's take the final example. This is where you purchase a large amount of money, but the risk of money loss is borne by you. This is in the case of investment in shares through mutual funds. Everyone wants to be rich, and at least each one of us wants to have enough money to live a happy life. A route adopted by individuals is investment in shares through mutual funds. What mutual funds do is that they are expected to return an increased amount of money. However, the risk is there that the entire money invested could be lost. Thus, what is happening is that an insurance product is being purchased, which is expected to give a large amount of money with the money in hand today. Now, from here, we have discussed what financial products are, what's the use of financial products. We haven't gone into the technical definition of a financial product. We have tried to understand financial product from a perspective that we can say is a common man's perspective, how financial products are used for the purpose of managing the risks that we have, managing our financial affairs, so that we can use the money that we are going to have, the money that we are going to get in future by investing today, or money that we would need for medical emergencies, or money that we would be needing at certain point of time. Now, when we are investing somewhere, or when we are picking up a financial product, then of course the next question that arises is that how are we going to be protected if some deficiency comes up in such financial product or the financial service that has been provided to us by the financial institutions, banks, insurance companies, mutual funds, that the asset management companies, etc. So we are going to look up to consumer protection in this slide. You must be having an idea of what is consumer protection. Consumer protection essentially protects us from defects in products and services. If we are purchasing a product or availing a service, then if there is a defect in the product or service, we are entitled to a replacement, or the service may be provided to us at a later date. And in case it's not possible, then we are entitled for a refund. Where these remedies are not provided, recourse can then be had to the Consumer Dispute Resolution Commission at the district, state, and the national levels. Now, compared to financial products, in most of the cases, goods, and to an extent, a number of services, the things are more or less straightforward. The deficiency in such goods and services are evident at the time of purchase or hiring or shortly afterwards, and they can be easily replaced or refunded. Further, in most such cases, a layman can easily understand whether such goods and services are deficient or not. Financial products are complicated products, and what is provided in the legal jargon of these products is not very easily appreciated by a common man like me and you. Even experienced professionals are sometimes taken for a ride with these financial products. Thus, it is necessary to provide parallel mechanism for the redress of grievances in the case of financial products. We will first discuss some of the salient features of the. We will go on to the redress mechanism for the banking products. Now, the redress mechanism of the banking products is approaching the banking ombudsman after inquiry from the bank concerned. Most of the issues can be solved at the first contact level, but if they are not solved, then one can approach the banking ombudsman that has been deputed by the Reserve Bank of India for hearing the complaints that arises from consumers. As you can see on your screen, this is the Banking Ombudsman Scheme 2006 amended, which was amended up to July 2017, which I will be discussing out here in this presentation. Under the Banking Ombudsman Scheme, the Reserve Bank of India may appoint one or more of its officers in the rank of Chief General Manager or General Manager to be known as the Banking Ombudsman to carry out the functions entrusted to them by or under the scheme. Now, what are the functions of the Banking Ombudsman under the Banking Ombudsman Scheme 2006? The Banking Ombudsman shall receive and consider complaints relating to the deficiencies in banking or other services filed on the grounds mentioned in clause 8, irrespective of the pecuniary value of the deficiency in service complained, and facilitate their satisfaction or settlement by agreement or through conciliation and mediation between the bank concerned and the aggrieved parties, or by passing an award as per the provisions of the scheme. This is the function of the Banking Ombudsman and appointed under this Banking Ombudsman scheme. From here we have to look what kind of complaints a Banking Ombudsman can receive from the consumers. Complaints can be filed with the Ombudsman on several grounds, some of which are non-payment or inordinate delay in payment or collection of checks, drafts, bill, etc., non-acceptance without sufficient cause of a small denomination notes tendered for any purpose and for charging of commission in respect thereof, non-acceptance without sufficient cause of coins tendered and for charging of commission in respect thereof. We will look at further points of complaints to the Banking Ombudsman. Now you can see on your screen, these are the grounds of complaints. The first 3 points we have already discussed. I'll read out the other points, the other deficiencies that have been provided in the Ombudsman scheme. D. Non-payment or delay in payment of inward remittances, failure to issue or delay in the issue of drafts, pay orders or bankers' checks, non-adherence to prescribed working hours, failure to provide or delay in providing a banking facility other than loans and advances promised in writing by a bank or its direct selling agents, delays, non-credit of proceeds to parties' accounts, non-payment of deposit or non-observance of the Reserve Bank directives, if any, applicable to rate of interest or deposit in any savings, current or other account maintained with the bank, complaints from non-resident Indians having accounts in India in relation to the remittances from abroad, deposits and other bank related matters, refusal to open deposit accounts without any valid reason for refusal, levying of charges without adequate prior notice to the consumer, L. Non-adherence to instructions of Reserve Bank on ATM oblique debit card and prepaid operations in India by the bank or its subsidiaries, or any of the following: account debited but cash not dispensed by ATM, account debited more than once but for one withdrawal in ATMs, or for POS, that's point of sale transactions, less excess amount of cash dispensed by ATMs, debit in account without use of card or details of the card, use of stolen cloned cards, others. M. Non-adherence by the bank or its subsidiaries to the instructions of RBI on credit card operations on any of the following: unsolicited calls for add-on cards, insurance for cards, etc., charging of annual fees on cards issued free for life, wrong billing, wrong debits, threatening calls, inappropriate approach of recovery by recovery agents, including non-observance of Reserve Bank guidelines on engagement of recovery agents, wrong reporting of credit information to Credit Information Bureau, delay or failure to review and correct the credit status on account of wrongly reported credit information to Credit Information Bureau, others. N. Non-adherence to the instructions of Reserve Bank with regard to mobile banking, electronic banking services in India by the bank or any of the following: delay or failure to effect online payment, fund transfer, unauthorized electronic payment, fund transfer. O. Non-disbursement or delay in disbursement of pension to the extent of grievance can be attributed to the action on the part of the bank concerned, but not with regard to its employees. P. Refusal to accept or delay in accepting payment towards taxes as required by Reserve Bank government. Refusal to issue or delay in issuing, or failure to service or delay in servicing or redemption of government securities. Forced closure of deposit accounts without due notice or without sufficient reason. S. Refusal to close or delay in closing the accounts. T. Non-adherence to fair practices codes as adopted by the bank. U. Non-adherence to the provisions of the Code of Banks Commitments to Customers issued by banking codes and standard boards of India and as adopted by the bank. V. Non-observance of Reserve Bank guidelines on engagement of recovery agents by banks. W. Non-adherence to Reserve Bank guidelines on parabanking activities like sale of insurance, mutual funds, other third-party investment products by banks with regard to the following: improper, unsuitable sale of third-party financial products, non-transparency, lack of adequate transparency in sale, non-disclosure of grievance redressal mechanism available, delay or refusal to facilitate after-sales service by banks. X. Any other matter relating to the violation of directives issued by the Reserve Bank in relation to banking or other activities. 2. A complaint on any of the following grounds alleging deficiency in banking services in respect of loans and advances may be filed with the Banking Ombudsman having jurisdiction: non-observance of Reserve Bank directives on interest rates, delay in sanction, disbursement or non-observance of prescribed time schedule for disposal of loan applications. C. Non-acceptance of application for loans without furnishing valid reasons to the applicant. And D. Non-adherence to the provisions of fair practices codes for lenders as adopted by the bank or Code of Banks Commitments to Customers as the case may be. E. Non-observance of Reserve Bank guidelines on engagements of recovery agents by bank. And F. Non-observance of any other direction or instruction to the Reserve Bank as may be specified by the Reserve Bank for this purpose from time to time. So as you can see, these are the grounds of complaints to the Reserve Bank or to the Banking Ombudsman. Now, of course, the first point of approach, or the first point where you have to file the complaint, is with the bank itself. There are countless reasons why some things could go wrong, and once it has been brought to the banking authorities, the bank officials of the bank concerns, most of them stands rectified. But there are certain cases when it's not happening, and then you have to approach the ombudsman. This provision of ombudsman has been provided and to serve as a go-between before you can approach the courts, so that an ombudsman is a person who has got an idea, or who has been working in the banks for a long time, and therefore he has an idea how the banks work, and he can easily decide, or he can easily inquire why the complaint has arisen. Was there a deficiency in service? He is a professional who has been trained in the banking activities, and therefore he or she becomes the best person to uh, take a proper course of action in the case of complaints. Now from here we will move on to the redress mechanism for insurance products. Again, as we have seen in the banking setup, here in the case of insurance also, the first step is to approach the complaint redressal cell of the concerned insurance company. The complainant also has an option to approach the ombudsman. The site is given below, and at this site the addresses of the various regional ombudsmen are provided. Now basically the first point of contact is the insurance company. If the insurance company is not listening, then it's advisable to approach the ombudsman, because at the very first point of time it's easier to solve your complaints at the insurance company level itself. However, of course you should have options in front of you, because if you don't have, then the people are not going to listen. So if there is a threat that you are going to approach the ombudsman, then the insurance company people or the officials will listen. Otherwise, what would happen is that if you approach them, they can make you go around and around without listening. So the provision of ombudsman is necessary, but still the first point of contact is the insurance company, because in most of the cases the problem could be easily solved by the officials of the company. Now this is at the IRDA site, which provides for the cell for redressal of grievances of policy holders. The link for this site is given at the top of the page, and you can take a look at the page and how it has been the mechanism that has been provided by the Insurance Regulatory and Development Authority of India, IRDAI. What they have provided is that they you can send it through a complaint. You can send a complaint form through email or by post. The address for sending out a physical post is given, which is the General Manager, Insurance Regulatory and Development Authority of India, IRDAI, Consumer Affairs Department, Grievance Redressal Cell, SY number 115/1, Financial District, Nana Kramguda, Gachi Bauli, Hyderabad. The other way is that you can email the complaint that you have. Of course, you will have to download the complaint form, which you can see it's provided out here. This is the link which will help you to get the complaint form. I will be giving you the link in my next slide rather. And once you have filled up the complaint form, it's a 6-page complaint form, then you'll have to send it by email to complaints@irdai.gov.in. The third way is to go for integrated grievance management system, that is the IGMS, and click on this portal which is provided out here for registering of complaints. Here you can monitor your complaints, the status of your complaints. The last option is that you can call toll-free number 155-255 or 1-800-4254-732. So these are the mechanisms, or these are the routes, or these are the channels through which you can file complaint with the IRDAI. Now, this page shows you the link for Insurance Ombudsman. Once you go onto this page, there would be another link which would be given to you for the purpose of finding out the Insurance Ombudsman which have been appointed for particular district or particular regions. This Insurance Ombudsman have been appointed under the Insurance Ombudsman rules which came into force with effect from April 25, 2017. The purpose of these rules is to settle claims and resolve disputes between the insured and the company and their agents. These rules are applicable on all insurance companies. The disputes that can be addressed by the Ombudsman are delay in the settlement of claims, any partial or total repudiation of claims by an insurer, any dispute over premium paid or payable in terms of the policy, misrepresentation of policy terms and conditions at any time in the policy document or policy contract, any dispute on the legal construction of the policies insofar as such disputes relate to claims, policy servicing related grievances against insurers and their agents and intermediaries, issuance of a life insurance policy, general insurance policy, including health insurance policy, which is not in conformity with the proposal form submitted by the proposer. 8. Non-issue of any insurance policy to customers after receipt of premium in life insurance and general insurance, including health insurance. Any other matter resulting from the violation of provisions of the Insurance Act 1938 or the regulations, circulars, guidelines or instructions issued by the IRDAI from time to time, or the terms and conditions of the policy contract insofar as they relate to the issues mentioned at clauses 1 to 6. Now again, as you can see, the Ombudsman provides a very useful service, which, because an Ombudsman would be a person who would be knowing the affairs of the insurance company, or who would be knowing the way an insurance company functions and where the problems can or may arise. However, if the issue is still not resolved at the level of the insurer concerned, then the next step is to approach the grievance redressal cell of the IRDAI, which I have shown to you earlier. These are the means once you approach once you click onto the link, you will get the links of the Ombudsman that have been appointed. This is the complaint form that can be downloaded from the website. The site address is given. You can fill up the complaint form and then send the complaint form by post or by email. This is the Integrated Grievance Management System, IGMS, in which you have to register before lodging a complaint. And last is your the way you are going to first register yourself before lodging a complaint. You will have to provide your first name, last name, date of birth, address, district, state. Once you have done that, then you will be getting your registration ID and password, and thereafter you can register your complaint. Now finally, if everything else fails, then the judicial mechanism would have to be invoked under the various acts. From here we move on to the redress mechanism for the mutual funds product. Again, the same thing as we have been following in the banking and the insurance product is that to first approach the AMC concerned. AMC is the asset management company. If the complaint is not resolved at the AMC concerned, then the second step would be to approach the SEBI, Securities and Exchange Board of India, through their SCORES, SEBI Complaints Redress System page. This is the SCORES page. The link has been provided, and you have to register on the SCORES page before you can lodge in a complaint. The SCORES page, this is the registration form of the SCORES page, and once you have registered, then you will be able to register your complaint. Now once you have registered and opened an account, you will have to provide the credentials that you can see out here. These are the necessary credentials: name, email address, address of correspondence, state, union, territory, PAN, mobile numbers. Once you have received your credentials, once you have received your login ID, then you can proceed on to the complaint section. In the complaint section, there would be several categories, and complaints can be filed after selecting the relevant category. The copy of the complaint is sent to the fund house for resolution, and SEBI keeps track of the complaint and its resolution. Now, there could be cases while most of the complaints are likely to be resolved at the level of the ombudsman, or they would be resolved at the level of SEBI, but there could be cases when you have to approach the Consumer Dispute Redressal Commission or the judicial system in the form of High Court or the Supreme Court. However, in case of approaching the High Court or the Supreme Court, certain rules or certain regulations have to be followed. You cannot approach you cannot approach the High Court or the Supreme Court for each and everything when you have got alternative mechanisms of dispute resolution available. However, let's discuss the Consumer Dispute Resolution Commission. There are three levels of redress commission. District Commission. For District Commission, the jurisdiction is up to rupees 1 crore. State Commission, the jurisdiction is up to rupees 10 crore, and for National Commission, the jurisdiction is for case of amount of above rupees 10 crore. Appeals lie from District Commission to the State Commission, and from the State Commission to the National Commission. Now, we will discuss a bit about the Consumer Dispute Resolution Commission, the Consumer Dispute Redressal Commission, and the Consumer Protection Act 2019. Under the Consumer Protection Act, a couple of definitions have been provided. I won't be discussing all of them, but a few of them which I think are important in the context of this presentation. First of all, complaint. Complaint means any allegation in writing made by a complainant for obtaining any relief provided by or under this Act, that an unfair contract or unfair trade practice or a restricted trade practices has been adopted by any trader or service provider. The goods bought by him or agreed to be bought by him suffer from one or more defects. C. The services hired or availed of or agreed to be hired or availed of by him suffer from any deficiency. D. A trader or a service provider, as the case may be, has charged for the goods or for the services mentioned in the complaint a price in excess of the price fixed by or under any law for the time being in force. Or B. Displayed on the goods or any package containing such goods, or displayed on the price list exhibited by him by or under any law for the time being in force, or agreed between the parties. I'll leave out other parts of the complaint, but this is in essential what a complaint is, when you can find what constitutes a complaint. Now, the Act has defined consumer. Consumer means any person who buys any goods for a consideration which has been promised, paid or promised, or partly paid and partly promised, or under any system of deferred payments, and include any user of such goods other than the person who buys such goods for consideration paid or promised, or partly paid or partly promised, or under any system of deferred payments, when such use is made with the approval of such person, but does not include a person who obtains such goods for resale or for any commercial purpose, or hires or avails of any service for a consideration which has been paid or promised, or partly paid and partly promised, or under any system of deferred payment, and includes any beneficiary of such service other than the person who hires or avails of the service for consideration paid or promised, or partly paid and partly promised, or under any system of deferred payment, when such services are availed of with the approval of the first mentioned person, but does not include a person who avails of such service for any commercial purpose. Deficiency means any fault, imperfection, shortcoming, or inadequacy in the quality, nature, and manner of performance which is required to be maintained or under any law for the time being in force, or has been undertaken to be performed by the person in pursuance of a contract or otherwise in relation to any service, and includes any act of negligence or omission or commission by such person which causes loss or injury to the consumer, and deliberate withholding of relevant information by such person to consumer. Now let's discuss the District Redressal Commission. The District Consumer Disputes Redressal Commission is established by the state government in every jurisdiction, and the following remedies can be granted by the District Commission. A. To remove the defect pointed out by the appropriate laboratory from the goods in question. B. To replace the goods with new goods of similar description which shall be free from any defect. C. To return to the complainant the price, or as the case may be, the charges paid by the complainant, along with such interest on such price or charges as may be decided. D. To pay such amount as may be awarded by it as compensation to the consumer for any loss or injury suffered by the consumer due to the negligence of the opposite party, provided that the District Commission shall have the power to grant punitive damages in such circumstances as it deems fit, to pay such amount as may be awarded by it as compensation in a product liability action under Chapter 6. F. To remove the defects in goods or deficiencies in the services in question. G. To discontinue the unfair trade practices or restrictive trade practices and not to repeat them. H. Not to offer the hazardous or unsafe goods for sale. I. To withdraw the hazardous goods from being offered for sale. J. To cease manufacture of hazardous goods and to desist from offering services which are hazardous in nature. K. To pay such sum as may be determined by it, if it is of the opinion that the loss or injury has been suffered by a large number of consumers who are not identifiable conveniently, provided that the minimum amount of sum so payable shall not be less than 25% of the value of such defective goods sold or services provided, as the case may be, to such consumers. L. To issue corrective advertisements to neutralize the effect of misleading advertisement at the cost of the opposite party responsible for issuing such misleading advertisement. M. To provide for adequate cost to parties, and N. To cease and desist from issuing any misleading advertisement. Now, as far as the State Commission is concerned, it has got jurisdiction up to the extent of rupees 10 crore, and it has got the powers to issue directions as it deems fit, or directions that are available to the District Commission, but they exceed the monetary limit, and similar is the case for the National Commission. This is the position of the Consumer Dispute Resolution Mechanism, and this mechanism may be used by the financial consumers if they are not able to get the redress at the level of the companies or the prescribed mechanisms. Now we move on to our final slide. Why financial consumer education is necessary. Financial products and services are providing us with financial security, avenues for investment, and also provide the national economy with the necessary resources. It is necessary for us to know how we can protect ourselves, since where an individual ends up losing money on account of deficiency of the service provider due to some of the reasons, the hardship that he faces are intense. That is the first point, because if there is a deficiency in service, the amount of money lost is rather huge, and the hardship that an individual faces in such circumstances could be very intense. Further, it is necessary that for the national economy to develop, we have to channelize the money available with each of us into the national economy, and for this the financial products are very essential. We are going to channelize our money into these financial products and park with these institutions only when we have trust in these institutions, and this trust is developed through these legal mechanisms that we can enforce, or we can go in for dispute resolution if there is a deficiency or defect in the product or the service. The other thing is that people are entering, people are purchasing, people are looking for these financial products, and each and everyone is of us is involved. Unless until we understand how to uh, help the people when they are in need, when they are facing difficulties with regard to these financial products, if there is a deficiency, till that point of time, we may not be, till that point of time, we may be, we may not be able to properly assist them and help them. That's all. Thank you.